viewers, welcome to my channel. Today we are going to see a sum from not-for-profit organization. It's a comprehensive problem asked in the second revision examination of 2025 in Chennai district. So from the following receipt and payment account of Yerkadu Youth Association, prepare income and expenditure account and balance sheet as on 31st March 2020. So before getting into the sum, you must understand while preparing the income and expenditure account, you have to keep in mind some things. First thing is that in income and expenditure account, you have to record only the revenue items pertaining to the current year alone. No previous year, no subsequent year are recorded. Second thing is that no capital receipt. Now, what is a capital receipt, ma'am? Capital receipt is a receipt which you have not received in the normal course of business. It is a special receipt. This is going to be spent. You are going to receive it, not very often. This is non-recurring in nature. It's not going to happen again and again. Okay. So this capital receipt is a liability for the NPO, not-for-profit organization, because they have to spend it for the purpose for which it was received. So that's a liability. So you have to show it in your balance sheet on the liability side. Second thing, there may be some capital expenditure. Capital expenditure means any expenditure which is going to give you the benefit for more than one accounting period. Suppose you buy a fixed asset like air conditioner, that is going to give you benefit for more than one accounting year. So that is not going to occur again and again. So it is also non-recurring in nature. So that will be shown on the asset side of the balance sheet. Okay. And in case of any fund specifically received for some specific thing like match fund, prize fund, tournament fund, and you have to take those receipts to the liability side, and all the expenses relating to that fund will be subtracted from that receipt. So all of you know this fund accounting, I hope so. So we are going to take out the fund if we have received anything for a specific purpose and related expenses also. Suppose there is a prize fund and prizes are awarded, out of that fund only they have awarded the prizes. If there is any match fund and the match expenses, we are going to remove both the items towards to the liability side of the balance sheet. And any specific donation, suppose a legacy received for some specific purpose, you have to do it. Only you have to construct a building or so, you have to spend it only for a specific purpose, then it is a capital receipt. You have to take it to the liability side. So now you understand, one thing is that only current year related item you are going to record, no capital receipt, no capital expenditure. And the third thing is that any expenditure incurred but you have not paid for that, the amount has not been paid for, still it will be taken into account. Same way, any income you have already earned and but the money is not received, you are going to record it in the income and expenditure account. For example, subscription. Subscription is a periodic sum you have to receive from the members of the NPO, and that periodic means immediately it is recurring in nature. So some members have not paid right now, they will pay it in the next year or after 1 or 2 months. So for the current year, when I am closing the year, that amount will definitely has to be received for that accounting period whether it is received this current year or in the next year. But the amount pertains to this year and it is a revenue receipt. So we are going to record it whether any income earned, received or not, any expenditure incurred, paid or not. Because income and expenditure account follows the accrual basis of accounting. So at last, in nutshell, what we are going to do, from the receipt and payment account, some item may not relate to the current year. So we are not going to take it into this. We don't need it. And some of the items may be capital receipt. From the receipt side will go to the liability. And rest of the items will go to your income and expenditure account. Same way, on the payment side, some of the capital expenditure will go to the asset side of the balance sheet and some of the item will go to your income and expenditure account on the income side. So we are going to first what we have to do, you should not be in a hurry to close your income and expenditure account. First, open both the accounts. Open your income and expenditure account, and I have already filled something for time saving. You can see I have opened both income and expenditure account and the balance sheet, but I have not closed it. What you have to do, first you post one by one item, and first of all you see whether there is a opening capital fund. Otherwise you have to prepare opening balance sheet. So we have got the opening capital fund here. So first item, cash in hand of the opening balance. We don't need it because we are already having the capital fund. Next item, it is government grant for purchase of books. This is a specific donation. It is a capital receipt. So this will go to the liability side of the balance sheet. So I have entered in the liability side government grant for purchase of books 10,000. Okay. So now moving on to the next item, subscription. It is a revenue item. So it should go to the income side of your income and expenditure account. So I have taken it to the income side of income and expenditure account. I have written on the inner column so that if there is any adjustment, we will do it later. Next one is admission fees. This is also a revenue income receipt. So I have taken it in the income side, credit side of your income and expenditure account. Now, prize fund. Fund is a capital receipt and it is a specific fund received. So I have taken to the liability side of the balance sheet. Now moving on to the next one. Bank interest we are going to get every month or every 3 months. So it is recurring in nature. And sale of newspaper, I have taken it to the income side both. Now moving on to the payment side. Salary we are going to make every month. So it is a recurring revenue. So I have taken salary and office expenses this side. Salary 14,000 and office expenses. Next item is books purchased. Books is an asset. Asset purchased is a capital expenditure. So I have taken it to the balance sheet asset side. Now stationery. Whenever you see stationery or stock of sports material, immediately these may be consumption materials. So there may be some opening stock, may not be also. But if there is any opening stock, you add the purchases. And if there is any closing stock, not necessarily it should be there. If it is that, then you subtract it and show the consumed stationery outer column. So for safer side, I have taken 2 stationery consumed opening stock and I have entered the purchases, and closing stock we have to see it later. So now newspaper purchased, I have entered here newspaper purchased. Now coming to prizes awarded. So out of the prize fund receipts, these prizes were awarded for 5,000 rupees. So we have to take it to the liability side and reduce it from the fund receipt, subtract it from the fund receipt. So balance 1,000 rupees is left out. It is shown in the liability side of the balance sheet. The last item of receipt and payment account is cash in hand. This is an asset for the current year. So I have taken to the balance sheet cash in hand. I wrote it in short, 9,900. Now coming to the adjustment. Opening capital fund, I have put it in the balance sheet, 20,000. Now next item is books. Books they have already have on 1/4/2019. It means they will have the books now also. So we should take it to our balance sheet. So I am going to write the books. The opening books we are having 9,200. So the total books available now 24,200. This is our asset. Next adjustment is subscription due but not received. Subscription due means it is income for the current year but not received. So we have to add it to the income side, 1,700. So this will come as 26,500, and immediately you should show it as an asset because this amount is receivable. Okay, subscription outstanding will come here as 1,700. So now moving on to the next one, consumption of stationery. There was an opening stock of 1,200, closing of 2,000. So opening stock 1,200 and we have purchased for 1,800. So we were having a stationery of 3,000, but now closing stock left out is 2,000. So material consumed is, stationery consumed is only 1,000. So immediately the closing stock should come to your balance sheet asset side. Closing stock of stationery 2,000. Now we have entered everything. Now we can close the income and expenditure account. 26 plus 2, 28 plus 1, 29, 30, 31, 100. So you can have the total 31,100. So I am going to copy this total on this side. We'll let us see how much is our surplus or deficit. So if this side is greater, income is more, means surplus. 14 plus 1, 15 plus 2, 17 plus 7, 24,300. If you subtract it 24,300 from 31,100, we get 6,800. 6,800. This is our surplus, excess of income over expenditure. Now bring it to your capital fund. You add the surplus, 6,800. So 26,800. After finishing everything, you close your income and expenditure, then close your balance sheet. 24,200. Let us add this side. 24,200 plus 9,900 plus 3,700. The total comes to 37,800. So let us add the liability. 26 plus 10, 36 plus 1, 37,800. So the balance sheet gets tallied. Hope you are able to understand, and this method will give you more accuracy as well as you can have a speed control also, so that you will be able to finish your sum. Only thing is that you will be taking some time to enter it. After entering, you will be able to finish it in time with accuracy. Thank you for watching my video. If you have not subscribed yet, please subscribe my channel and don't forget to share with your friends and relatives whosoever interested in these type of educational videos. Thank you.